Yeah, all right. Damn, it's 2 weeks later. Damn, a lot has happened. I ain't gonna lie. And as you can see right now, I'm in a different scenery right now. It's what day is it? I think it's day 23 right now. Day 23, yeah. Yeah, day 23, bro. I got like so much has happened, bro. I got a new room. Shit. What else? What else? I haven't worked for like 2 weeks. Got the haircut as I said I was gonna do. And yeah, still, but yo, I haven't worked for 2 weeks because like the first week I was sick. I was like really sick. I don't know lie. And then second week I was doing this. I was making this room up. I was painting. I was plastering the walls. I was getting stuff for the room and all that. No more holes in the walls. It's all gonna get painted tomorrow as well. They're all gonna get painted tomorrow. See, patch up all the holes in the walls. Over here as well. Yeah, all the holes are gone. Let's go. Let's go with W. I like this a lot. All I gotta do right now is kind of clean up some things like down here. I gotta clean this up. I gotta clean it up. The dust and stuff. Gotta paint it over. I gotta go buy some stuff as well. I gotta go buy some stuff as well. I gotta go buy a bed frame. I already have a bed. I already have a I already have a drawer. Yeah, so I have a drawer. I have a bed frame. No, I have a drawer. I have a bed. I need to get a bed frame. I need to get paint. Type of stuff, bro. I don't even know if you guys know this or not, but like before this room, I was sleeping outside in the living room on the couch, and my setup was also outside on the like right next to the couch. I'm gonna show you. Let me show you. Hold on, let me show you. Sleeping right here. I was sleeping right here, and like the setup was like right over here, right here, bro. Yeah, bro. Like everything was outside. I didn't have my own room, nothing. Like I didn't have my own privacy. I'm like, so me having my own room now. Yeah, I haven't had my own room in like a long time, like over like years, like over like 2 years maybe I think, or a year and a half. But yeah, yo, so I'm happy I have my own room now, so I can actually work properly without getting disturbed and everything like that. So it's gonna be really like I'm so happy to have my own room now, to actually be able to work without being disturbed all the time, bro. I'm very happy. I am very happy. But the haircut, I was supposed to get a haircut a while ago, like a while ago, but I didn't have the money at the time. So yeah, I got a haircut. Everybody said how one of my goals was to finish baby pips, and then after I finish baby pips, then I get a haircut. So yeah, I finished baby pips and I got a haircut. I think I got a haircut almost like 4 days ago, 4 or 5 days ago. So yeah, I got a haircut. Yeah. So what's been new is new room, got the haircut, and mentor. I have a mentor now. I got a mentor. I was supposed to make a video like when I was supposed to make a video before, like 2 weeks ago or whatever. I put that I have a mentor in that and what I talked about with my mentor. So I'm gonna just input that clip in here. Even though it was 2 weeks ago, I'm gonna just input that clip into here. And yeah, so he told me to read a book or whatever, but I'm gonna also input other things in there. And he told me to read this book called Trading in the Zone. So I'm like 3 chapters in right now. Yeah, I'm 3 chapters in. Like I'm so behind right now. Like I need to catch up. Like I need to read that. I need to do a baby pips review, I need to finish writing the 250 lines for how to be a disciplined trader. But yeah, yo. So yeah, but I think first thing I'm gonna do is I'm gonna read that book over again. And I'm gonna start from chapter 1 and continue. So I'm gonna take my time and actually read that book. And then I have some homework that my mentor told me to do. He told me to understand Forex Factory, learn about fair value gaps, and learn about order blocks and liquidity, if I'm not mistaken. Yeah. So I have some homework that he wants me to do, so I'm gonna do that, and then read, and then the line. So I got a lot of other things to do. So I also, since for that week where I was sick or whatever, for the week I was sick or whatever, I was supposed to do 7 hours, but I didn't do 7 hours. So this week I'm gonna be doing 7 hours, next week 8 hours, and the week after that 9 hours. So I'm gonna continue where I started off. It feels kind of weird though, because I haven't worked in a while, so it feels weird like me working right now. I ain't gonna lie to you still. But yeah, I can't wait to get back into it. But yo, let me show you the room a little bit. Hold on, let me show you the room a little bit. It's gonna be getting changed. Like this TV, I didn't get them out yet. This TV's gonna be going up here, like up here. I'm gonna get some posters from over there. I'm getting a new desk. I got a new chair though. Got a new chair, so I'm happy with that. Got a new chair. I'm getting a new desk. What else am I getting? I'm getting a lamp. This is gonna be getting like fixed. Like cable management, it's gonna be better. I don't want to do it right now because I'm getting a new desk. This is a desk that was outside when I was working before. This was outside, and the chair that you've seen that I showed you before and I was outside, that's the chair I was using. But this is a better chair. This is a way better chair. But yeah, I'm gonna put a lamp right here, going all the way up. I'm gonna get a whiteboard right there, a new table, posters right here, a couple posters right there. The TV mounted right here with the board in the bottom to hold up like the remote and stuff. I'm getting a new laundry basket. Yeah, so this is how it looks. And also with these curtains, it's black. Let me show you. Hold on. Right now, it's bright in my room, right? See, it's bright, right? Let me just show you. So this is why I love this. Hold on, let me show you. Look how dark it is now, man. Yeah, I like that a lot. I like this a lot. I could just have my room be dark and just work when it's dark, bro. Oh, I like that a lot. I ain't gonna lie to you still. But yeah, most of the time, I'm probably just gonna be working like this. I ain't gonna lie to you, mostly. Yeah, I like when it's dark. But if I ever want light to come in, just open it up. And yeah, still, I also got an air purifier. Like this is one thing, like this right here. This is the one thing that I'm like, yo, I need to get this. I've been wanting this for a long time. An air purifier, bro. But yeah, that's about it. Got the coffee ready. I'm gonna make some Tim Hortons coffee this time. This is good. This is really good. But yeah. So first things first, I think I want to get into reading, and then I'm gonna do a review of baby pips because there's some things that I realize that I don't understand fully yet, like different orders, like limit order, stop order, stuff like that. So I need to understand those. And what else? Then I'm gonna learn about fair value gaps, order blocks, liquidity, and then I'm gonna write the 250 lines of I will follow my trading plan. And then yeah, so I have 7 hours to do. So yeah, I got 7 hours of work to do today. So I'm gonna try getting everything done today. So yeah, I'm gonna get into that right now. Yeah. Right, so I just came back from basketball, right? And there's something that's been in my mind like since I've been playing basketball, but it kind of correlates with trading in a way. Well, it does correlate with trading. Well, how it goes is like this. When I first got to play basketball, right, I wasn't making any of my shots. I was in my head so much. Like, I was so much in my head. I'm like, bro, why am I not making my shots? And me being in my head, made me not make any more shots. Just maybe kept breaking my shots, airballing or whatever. But yeah, and I was wondering, like, bro, why? Why am I like missing all my shots? And then there are people that I know that I'm better than. They're making their shots, right? And I wasn't understanding why. And then the more and more that they were making their shots and I was missing my shots, I realized it was confidence. It was literally confidence. They had confidence in their ability to shoot the ball and get it in. Even if the ball didn't go in, they didn't go in there thinking that, or they didn't shoot the ball thinking, if I miss, then I'm done shooting. I'm not going to shoot no more. Even if they did miss, they said, I'm going to shoot again. If I miss again, I'm going to shoot again, and I'm going to shoot again, and I'm going to shoot again. Because they know in the past that their shooting ability has allowed them to make multiple points, multiple points, right? No matter if they miss now, no matter if they're off now, they're going to keep on shooting. Because the more they shoot, the more likely it's gonna go in. I was thinking, right? And then I was asking this guy that I know there. He's good at basketball, whatever, right? Like really good at basketball. And I was asking him, like, yo, how do you kind of overcome like those days where like you're missing all your shots and everything, right? And he gave me a good analogy, right? And he asked me, yo, what are you good at with basketball, right? I said driving the paint, going to get a layup. And he gave me an analogy, and the analogy was like this. If you get in a car crash, are you gonna stop driving? And I'm like, nah. He's like, yeah, because when I'm playing basketball and I miss 3 in a row, it doesn't get to my head because I know in the past I've also made 3 in a row. You know? Just because I'm missing 3 in a row now doesn't mean I'm gonna stop shooting, because I know in the past I've also made 3 in a row. And how I call this with training is like, when you have a trading plan or a trading strategy, right? Just because you miss 3 trades in a row, or 3 trades, it doesn't go the way you want it to go, doesn't mean you stop using that strategy, right? Because as a trader, you are supposed to be confident in your strategy. You are supposed to have countless hours of back testing, countless hours of back testing to prove to yourself that yes, this trading strategy does actually work. It allows you to be confident in your trading strategy. It allows you to be secure in your trading plan. So no matter if you go on a 3-day losing streak or even a 3-month losing streak, you know that yes, I'm confident in my trading plan. It doesn't matter. It doesn't matter if I'm losing right now. I'm confident in my trading plan because I know, because I have backtested for so many times, like for so much hours, for so many days, on so many trades to prove that the strategy worked. And yeah, so I'm fully confident in that trading strategy and that trading plan. And it's the same way it correlates to basketball. Those guys that are just shooting the ball and let's say it misses, right? But they keep their head high and they don't think in like they don't think about the past. They think about the present. If I miss that shot, I miss it. I'm gonna try again. It's those guys that are like, they were in the gym when nobody else was, putting up thousands and thousands of shots per se. Like, so they have put up way more shots than I have. So they are way more confident in their shot because they know that they trust their shot, because they know in the past that their shot has never failed them. So why would they stray from it? So even if their shot is missing now, they're gonna keep on shooting. They're gonna keep on shooting because they're confident in the shot. It's the same way according to trading. With your trading strategy, you're gonna keep on using your trading strategy, even if it loses. Even if you're on a 3 or 4 win losing streak, you're gonna keep on using your same strategy because you know that your trading strategy works. Because you know that in the past you have also been on a 4 winning streak, on a 4 trade winning streak. So you're not gonna stray away from that trading strategy just because you're losing a couple trades now. The same way as in basketball, just because you're missing a couple shots doesn't mean you're gonna switch up your whole form. So yeah. And after I realized that, after I stopped getting in my head and I just played my game and have like a tunnel vision, not thinking about the past. If I miss a shot, then I miss a shot. I'm gonna just keep playing. After I started thinking about that, and then after I started playing in a way just like tunnel vision. If I miss, I'm gonna just keep playing. I started making my shots, which is crazy still. But yeah, it's crazy. So that's what I was thinking about, and that's what was on my mind. But yeah, I had to get it off before I got in the shower and I just forgot about it. But yeah, I'm gonna go shower right now, and then I'm gonna come back and I'm gonna do some work. I have an hour more to go. Yeah, hour more to go. So yeah, I'll see you guys soon. Alright, so I just finished chapter 1 of Trading in the Zone. This is the book that my mentor gave to me to read while I'm learning from him. But yeah, I just finished chapter 1. I finished chapter 1 before, but I felt like I didn't understand it fully, and now I read it over again. I'm reading the whole book over again, one chapter a day. I felt like I understand now a little bit more. So what I had learned was how you close the gap from becoming from a successful trader to a trader that is not successful, that isn't a consistent and profitable trader, is erasing fear from your trading. The traders that are not profitable and are not consistently profitable, and the traders that are consistently profitable on a daily basis, on a yearly basis, on a monthly basis, is because they eliminate fear from their trading. The novice trader, they would get into the market, and let's say they see an opportunity emerging, but since they have fear in their trading, since they haven't accepted the risk that comes with trading, they will see that trade and say, okay, I think this is gonna go up. But since they haven't accepted the fear that comes with trading, although they think they have accepted the fear, since they haven't fully accepted the fear that comes with trading, they will let that opportunity pass them by. Excuse me. They will let that opportunity pass them by, and when that opportunity goes in a way that they say that they even thought was gonna happen, they will then look back and say, oh, why didn't I take that trade? Why didn't I do it? This and that. Because the reason for that is they haven't fully accepted the fear that comes with trading. But a professional trader has already accepted accepted the risk that comes with trading. They know that this trade could either be wrong or be right. They know that, and they are okay with whatever the outcome is. They have fully accepted the outcome of that trade, or whatever the case may be. Also, with a novice trader, they have a bunch of errors in their trading that allows them to not be a successful trader, and allows them to always be losing money. Their profitability curve is going down. It's not going up. And one of the reasons could be like this: since they are in a fear-based trading mindset, they haven't fully what's the word I'm looking for? Accepted the risks that come with trading. So since they haven't fully accepted the risks that come with trading, that means they will try everything to avoid that risk, to avoid that pain that comes from trading, to avoid the pain of losing that money, because they haven't fully accepted it, right? So let's say they do get into that trade, right? And let's say that trade is going the opposite way of where they wanted it to go. Let's say they wanted that trade to go up. They did a buy and wanted it to go up, but instead that trade went down. Since they have a fear-based mindset and they haven't fully accepted the risk that comes with trading, let's say that trade is going down. They have not taken their emotions out of that trade. So let's say that trade is going down, they are going to build their stop loss. They are going to let that trade run longer than it needs to be and lose money. That's a fire alarm still. And lose more money than they have to. let's say they are in that trade and that trade's going down. They are seeing that it's about to hit their stop loss. So instead of them being a smart trader and separating their fear, separating their emotions from that trade, they're saying, no, I don't want to lose my money. So I think that trade is going to reverse and go back up. But a smart trader would be like, okay, no, what price is doing right now is not what my strategy is. It's going against everything my strategy is. So I am not gonna let my trade run any longer, and I'm gonna close my trade. But a novice trader, a trader that has not unlocked that trader's mindset, will then say, you know what? Let me just widen my stop loss even more, and then they will allow themselves to lose even more money than being a smart trader and just letting their stop loss get hit or coming out of the trade earlier. With a smart trader, that's what separates them from a novice trader. They separate all their emotions from their trading. There is no emotions attached to their trading. They don't blame the market for the outcome of their trade. They know that they are in full control of what happens next. It's either they take the trade or they don't take the trade. If the trade loses, then they lose. If the trade wins, then that's okay. That's the difference between a successful trader and a novice trader. They don't have any emotions when it comes to trading. They are fully aware that there is a risk involved when it comes to trading. If they can lose money on this trade or if they can make money on this trade, either way, there is no emotions attached. And that's what makes them a better trader than everybody else, than the novice traders, you know? That's what makes them a profitable trader. That's what makes their profitability curve always going up, because they have separated their emotions from their trades. So there is no errors when they're trading. They don't make emotional trades. They make logical and smart trades. They are confident in their trades. Even if a trade loses, they're so confident in their trading. So that's what I learned from chapter 1 of Trading in the Zone. Yeah, so right now I'm going to get into a review of baby pips. There's some things I want to get into. I want to fully understand the terms for different orders, and I also want to get into what was it again? Let me think. What was it again? I want to fully understand how each what is it? Oh dang. How each pips differentiate from each lot. So if let's say I'm using a standard lot, a mini lot, or a nano lot, whatever, or a micro lot, I want to understand how each pips correlate to each stop loss and how much money you make for each pip. I just want to understand that fully before I move on to my homework for my mentor still. But yeah, I'm gonna get into that right now. So this will be work block A. This is I'm not counting this as my as work. I'm just counting this as like just reading, because I want to start reading either way. Even when I finish this book, there's still a lot more books that over here that I still need to learn as well, or not learn but read as well. So I'm trying to implement reading into my daily habit as well. So right now I'm gonna get into the review of baby pips, and I'm gonna get into the work for my mentor. So I'm gonna do a review of baby pips for maybe an hour and a half, or 2 hours, and I'm gonna get into whatever else. So now we're actually getting into the work sessions. Yeah.
Round 1.
just finished. Oh, let me stop this real quick. I just finished the review of baby pips. I went over some position sizing and pip counts, pip values, how to calculate it for each lot sizes. I understand that now, and I also understand the limit orders, stop orders, different types of orders. Yeah, I understand those. So stop order is a order executed above the price. And let's say price is market price is right here. A stop order will be right here. You're waiting for price to go up for it to be triggered. Or let's say your stop order is in the bottom. You're waiting for price to go lower to hit it, and then for it to be executed to go lower again. It's basically you thinking that let's say price is here. You have your price to be executed above the market. You think price is gonna go hit here and keep going up. And the same thing for below. You think price is gonna hit here and keep going lower. For a limit order though, it's different. Let's say price is here. You think price is gonna reach this point here and reverse back down. So you kind of waiting for price here. We're waiting for price to hit a better price point for you to get into that price, for you to get into the that trade and write it back down. It's the same thing for here. If price is here, you think price is gonna go back down and hit this price point and then go back up. That's a limit order. And a market order is when you take price at the most available price. Let's say price is trading at 1.0210, then you'll get it at that price. Let's say if you want to buy it at that price, you get it at that price. Let's say you have a buy price of 0.1021 and you have a sell price of 0.1022. Then if you want to buy it, you can buy it at that buy price of 0.0121. I think I said that. And if you want to sell it, you get a price at 0.0122. Yeah, so that's a market order, and there's a sell order, and it's a limit orders. That's a different types of orders. And you also have a trailing orders when every time price goes in your favor, you have a trailing stop loss, and it trails up by a specific amount. I think it's 10 pips. So let's say price goes in your favor by 10 pips, your stop loss trails by 10 pips. A stop loss order is obviously when you have a specific amount. Okay, you have a set price amount. And let's say if price hits that amount, your trade automatically closes and you're out of the trade. So it prevents you from losing even more. That's what it is. So that's what I learned for that. I have a quarter more to go for block A. So what I'm gonna do right now is get into some stuff that my mentor told me to learn about, which is the fair value. Actually, let me go see right now. Hold on. He said to hold on. He said to learn fair value gaps, learn about Forex Factory, learn how to use fair value gaps on the chart, and how to show it. He wants me to show how to use fair value gaps and what it is on charts. So I gotta learn about that right now. And I'm also gonna learn about liquidity because I need to learn what liquidity means. I don't really understand it right now. Liquidity and not order blocks. So just liquidity, fair value gaps, Forex Factory, learn how to use fair value gaps on the chart and how to show it on the chart as well. So I'm gonna get into that right now. some stuff for Forex Factory. What the different folders mean: red folder, orange folder, gray folder, and the yellow folder. If I'm not mistaken, yes, I'm right. Yellow folder, red folder, orange folder, and gray folder. Gray folder is not too bad. Orange folder is not too bad as well. Gray folder is when banks are closed. Yellow folder is not really relevant, but red folder is when you wouldn't really want to trade on those days. That's when the FOMC meetings are happening. Unemployment claims. Those things have a high impact on the market. Those are high impact days. You would want to trade on those times and days. I finished work block A, but I want to go into depth of Forex Factory. I want to understand what each of these terms mean, like FOMC. I obviously know what FOMC means, Federal Open Market Committee, but I want to know why it has a impact on the market. I want to see why prelim matters, why unemployment claim matters, all of these things. I want to go and write down their terms, their meaning, and why they have an impact on the market. So I just finished work block A right now. I'm kind of hungry right now. I'm gonna go see what there is to eat, and when I'm kind of hungry. But yeah, I'm gonna get into work block B soon. Just gonna get like 5 minutes and then get into it. Yeah. All right, so I just came back from outside. I was here for like 10-15 minutes, you know. I got me like a sandwich from Tim Hortons. And yeah, so you know, I'm about to get into. Oh shit! Gotta turn this shit around. Hold on. I'm about to get into work block B right now. You get me, bruv? I'm about to get into work block B. I'm gonna put this shit right here. No, that's okay. Put this shit right here. Got me some more coffee still. I heard if you drink coffee, after you eat your lunch, that's the best work session, man. So yeah, I'm gonna try that shit right now. But yo, I'm gonna get into learning what the most important red folders mean. Like I said before, the prelim, unemployment claims, FOMC meetings, some statements, stuff like that. I'm gonna go write those down here and what they do and why they impact the market in some ways. So you know, yeah, I'm gonna get into that right now. Oh goddamn! Oh shit! What the fuck? Damn! Hold on. Wait. God damn it! God damn! Oh my days! Damn! Yeah, we good now. So yeah, I'm gonna get into that right now. You know. Yeah, I'm gonna get into that right now. This is work block B. So for work block B, I'm gonna try doing down what I was gonna say. Putting those titles down of the red folders and what they mean. And then I'm also gonna be getting into fair value gaps as well today. Maybe I'm gonna do this for an hour or hour and a half or whatever, and then get into fair value gaps. And then, yeah, that's what it is. So Forex Factory terms and get into fair value gaps and learn about those. Yeah.
Round 2.
So I quickly went through some of the meanings of these red folders and why they affect the market so much. And I also went through the actual and the forecast of these things and why they are important as well. I feel like there's no need for me to kind of write these things down if they're already here. And if I'm going to be coming to these things daily to see what's happening and stuff like that. I was watching a TJ video and he was telling me that this was saying that we should learn about the Federal Reserve, how it works, and who manages the Federal Reserve. So I'm gonna get into a video like that. I'm gonna see how the Federal Reserve works, who created it, just important things that I should know. Not just because I'm a trader, just how it actually works, because it'll help in the long run. So I'm gonna get into that. I'm gonna see how the Federal Reserve works and everything. Just see any information that I may need. So I'm gonna look at a video about that real quick. Yeah. Oh, my eyes are closing. I ain't gonna lie to you. So I'm gonna go take a quick nap. Quick 30-minute nap, not too much. Drink some coffee before I go to sleep, so I don't oversleep. And yes, I'm gonna come back because I'm trying to understand the 2% inflation rate for the Federal Reserve, why they have that. But I'm kind of falling asleep, but I want to understand that. I really want to understand that. Still understand it. So yeah, I'm gonna go take like a 30-minute nap and come back and let's try to understand that real quick. So yeah, right now it's 5:26. I'm gonna come back at like 5:56. And yeah, still soon. See you guys soon. Alright, so it's an hour later. I'm gonna lie, I was tired of shit. Yeah, so I did 30 minutes of work block B. I got an hour and 30 minutes more to go, so I'm a little bit more refreshed now, for sure. Like, I'm a little bit better now. Still got a coffee. So yeah, I'm gonna rewatch the video and everything and try it over again. So we get into it right now. I'm gonna burn some incense right now. And yeah, I'm gonna get into finished the work sessions for today. Oh shit. All right, oh wait. Yeah. Read this shit real quick. Yeah. Oh shit. Fuck. Let me some instance. I will lie to you still. That's my machine. But yeah, we're going to get into that right now. Yeah, I'm gonna finish up work block B. I'd actually finish up my sessions today. I'm not gonna cut it short. I'm gonna actually finish up everything I got finished for today still. So yeah, let's get into work block B right now. Finish it up. Yep. Alright, so I'm not done with block B yet. I have like 40 more minutes, but I finished, well, not finished, of course there's more to learn, but I understand now about interest rates, the Federal Reserve, inflation rates, and how it all correlates with the market, and how it all correlates with any type of market, honestly. So what it is like this. With the Federal Reserve, they control inflation rates and also interest rates. Well, they control inflation rates with interest rates. They control the inflation rates, and they use interest rates as a tool to control the inflation rates. So and how that works is like this. Let's say if inflation is too high right now, they would cut no, yeah. If inflation rates is too high right now, then they would increase. Yeah, they would increase the interest rates. Yeah, if inflation rates are too high, they would increase interest rates, and if they increase interest rates, this will cause consumers to not borrow any money and save the money that they have, because if the interest rates are too high, they wouldn't want to borrow any. They wouldn't want to borrow from the banks because they know they would have to pay back even more. And with this also correlates with the products as well. Let's say if you want to go buy something, the interest rate for that will be higher as well. And since it'll be higher, a lot of people will start saving their money. And if they start saving their money, that means there will be no buying power, and that means inflation will get lower. But if inflation is too low right now, also for to get it lower, the Federal Reserve will stop pumping money into the market. Which also decreases the inflation as well. But if inflation is too low, let's say inflation is at 1%, I gotta realize that the Fed, they're trying to target an inflation of like 2%. So if inflation is at 1%, which is pretty low, if it goes any lower than that, you could head into a recession. But how the Federal Reserve increases inflation, let's say if inflation is at 1%, how they would start increasing inflation is by cutting interest rates. And if you cut interest rates, this increases the amount of people that want to start borrowing now, because if they start borrowing now, borrowing money from the banks, getting loans and stuff like that, the money that they will have to pay back would be less because the interest rate is because interest rates are low right now. So this increases borrowing from citizens, loans, the interest rates on loans. This also increases the amount of people that are buying stuff right now, which increases the inflation. When inflation is low, our economy is low. When inflation is too high, and our economy is very weak as well. So the closer that we are to 2% for inflation rate, the stronger our economy. So the Federal Reserve's job is to try their best to keep the inflation rate close to 2%. Let's say you're throwing darts, right? Let's say the dartboard is inflation rates, and the darts that are being thrown, they're being thrown by the Federal Reserve, and the bullseye is 2%. The Federal Reserve will always try aiming for the bullseye, 2%, 2%, 2%. It may not always get a 2%. Sometimes it may get a 2.3, sometimes it may get a 2.1, but 2% is that bullseye. So the Federal Reserve will always try to aim for that 2%. And when the inflation rate is too low, they cut interest rates, which increases buying power. Like a lot of people start buying more and then that will increase the inflation rate. But if the inflation rate is too high, then the Federal Reserve will increase interest rates. And when the Federal Reserve increases interest rates, people will start saving their money now because interest rates are too high. So that would increase the inflation rate. So yeah, I want to increase the inflation rate. So that's how they kind of control the inflation rates using interest rates. So that's what I learned about the Federal Reserve and how it works and why it's so important for the market. Because when people say, "Oh, what's that? Jerome? What's it? Jerome? I don't know. Jerome Powell? Yeah, Jerome Powell. Let me just check up quick. Yeah, Jerome Powell. When Jerome Powell speaks, the market moves because this is about it's the interest rates, and the inflation rates. Whatever he says determines what the market does. All right, even if it's like not good, all right, even if, like, let's say what he's gonna say isn't going to be bad or isn't going to be a good thing or whatever the market perceives going to happen will change it. Will shift the market that way either way. Let's say if he says that interest rates are going to be going higher now, and if interest rates are going to be going higher, that means higher. Let me just think quick. If interest rates are going higher, that means inflation rates are going lower. And if inflation rates are going lower, that means the USD is getting stronger. So people would buy USD. That means USD will be going up. But if inflation rate is lower, that means people would do other currencies against USD because the inflation rate is now lower. Okay, yeah, that's it. If inflation rate is lower, people would put USD to sell against other currencies. Like, let's say if it would be GBP USD, they would do GB buy against USD because the inflation rate is lower. But let's say if he comes in and says the inflation rate is now at 2%, then USD is gonna be stronger. And instead of you doing a sell against USD, you do a USD. Instead of you doing a buy against GBP USD, you'll do a sell against USD GBP because the inflation rates. If the inflation rate is strong, that means USD is strong as well. So yeah, that's what I learned. Yeah, of course. So right now I'm about to get into fair value gaps. I'm gonna learn fair value gaps right now. And yeah, so we'll get into that right now. 40 minutes more of work block B. And then yeah, but get into that right now. Let's get into it. Also, if inflation rates are high, that means a lot of businesses can't afford to hire employees. Yeah. And if inflation rate is low, that means a lot of businesses can afford to hire new employees. And if inflation rate is high, that means the interest rate. No, if inflation rate is high, that means the employment rate goes down. If inflation rate is low, no. If inflation rate is 2%, employment rate goes up. But if inflation rate is down, that means employment rate goes down. Yeah, that's what it is. Alright, so I just finished work block B. I'm still learning right now. I'm learning about liquidity right now. I didn't get into fair value gaps yet. I want to understand liquidity first because liquidity comes first before liquidity comes first before fair value gaps. So I want to learn liquidity first, liquidity sweep, liquidity grab before I get into fair value gaps. So yeah, right now I'm learning about liquidity and liquidity sweep, liquidity grab, and all that. When I understand that, then I'm gonna get into fair value gaps. So I'm gonna get into that. So I'm still learning it right now. This is liquidity right now. So I'm gonna finish learning that and understanding it, and then I'm gonna get into fair value gaps. So yeah, I'm gonna continue with that. Right now it's work block C, and yeah, I'm gonna continue doing that.
Round 3.
So I just finished work block C and D, and I finished learning about fair value gaps. I don't want to get into inverse fair value gaps yet. I want to make sure that my mentor actually wants me to learn about inverse fair value gaps. So I learned about fair value gaps, and I also learned about liquidity sweeps. With liquidity sweeps is basically where retail traders set their stop losses and their orders, and where market makers they basically attack those orders and create a larger order. So that example, let's say like let's say price is in the uptrend right now, whatever, right? Let's say price is right here in the uptrend. Price comes back down, and then price is going back up. A lot of retail traders will say, okay, price is in the uptrend now. I'm gonna place my order right here. Although price isn't here yet, I'm gonna place my order right here. They wait for price to get here, then they get into a buy. For market makers, they know that a lot of traders are putting orders here. They are also targeting that last peak. So let's say price went up, price went down, price went back up. A lot of retail traders, they put their stop losses right here, and they put their entry order right here. And market makers, since they know this, they target this these retail traders entry orders. And when they target these entry orders, they then place a large amount of sell. And when they place a large amount of sell, they take out that liquidity, that retail traders liquidity, bringing price back down, taking out those retail trader stop losses and bringing price all the way back down. That's all liquidity sweep is, and it's the same thing for inverse for a downtrend. And that's how a lot of people be falling for breakouts. I mean fake outs as well. That's a fake out. You think price is gonna go up, but instead price just takes you out, liquidity sweep, and comes right back down. So that's how liquidity sweeps work, or what I actually learned about liquidity sweeps. And for fair value gaps, it's basically like the gap in, it's a 3 candlestick pattern, and how it works is like this. The first and the third candlestick don't really matter. Yeah, the first and the third candlestick don't really matter. We just worry about the middle candlestick, because it'll let us know if it's a bearish fair value gap or it's a bullish fair value gap. So how it works is like this. Let's say you have that first candle, you have the middle candle, which is an engulfing candle. It's very long, or whatever, right? It doesn't have to be long also, but and you have that third candle. The top wick of that first candle and the bottom wick of that third candle, the gap in between them is a fair value gap. It is saying that there hasn't been orders that have been filled in between that gap. And how it works is that you think price is gonna go back down and fill in that imbalance, because that imbalance comes from the gap of that first wick and between the gap of the third candlestick's wick. And price is gonna come back down, fill in that imbalance, because that's an imbalance right there. Fill in that imbalance and then retrace back up. So let's say you're in an uptrend right now, right? That gap right there is an imbalance. Price is gonna come back down, fill in that imbalance, and then go back up. That's a bullish fair value gap. And for a bearish fair value gap, it's like this. Let's say the 3 candlesticks is like this. First candlestick here, second candlestick right here, third candlestick right here. That gap in between the first candlestick's bottom wick and the third candlestick's top wick, that gap right there is a fair value gap. That's an imbalance right there, because nothing has happened in between there, you know. So what we're gonna do as a trader is wait for price to come back into that and balance out that imbalance, and then go back down, which makes it a bearish fair value gap. I may not have went into it deeply, but I know how to also see those fair value gaps on the chart. Yeah, I'm gonna be learning more about it tomorrow. I'm just kind of tired right now, and yeah, I've been doing this for like 7 hours. So I just finished 7 hours of learning. So I did Force Factory, I did Liquidity, and then I also did 4 fair value gaps today. So yeah, I'm gonna go shower and then go sleep. I'm away from also. I'm also with my mentor to let me know if I also learned inverse fair value gap. I'm also going to be going over all the liquidity sweeps and all that stuff tomorrow as well. I'm just kind of tired right now. I've been sitting here for a minute, you know. It's like 12. It's 1 a.m. right now still, so I'm gonna go shower and go sleep still. But yeah, that's what I kind of got the fundamentals in a little bit. Not fully the fundamentals, but I kind of understand the gist of liquidity sweep. I understand Force Factory, like I understand how it works. But I understand liquidity sweep a little bit, and I also understand fair value gaps a little bit. So I'm gonna try my best to fully understand it tomorrow. Today's Monday. Well, today's Tuesday now. I did my work session for Monday, 7 hours. It's pretty good. Happy about that. Try to get that tomorrow as well. But yeah, I'm gonna get into. So I guess we're done for today. I'm just tired, man. I'm tired. We're done for today. I'm gonna go shower and I'm gonna go sleep. But yeah, did pretty good today. I'm gonna try my best to fully understand everything tomorrow. Yeah. But yeah, day. What day is it even? Let me see. I think day 23. Let's see. Yeah, day 23 it is. Let's say 23. Tomorrow, well, later on today, it'll be day 24. But yeah, we're doing pretty good. I don't know, I feel kind of weird, like, that I knocked myself off of my my schedule in a way, but I was sick. There's nothing I could do about that. When I was sick and also creating this room. And I'm happy I have this room now. It's just that I was on like a 15 day streak, and it's like kind of now gone, you know. So kind of upset about that one. But I'm gonna get it back.
Healthy masculine?
I'm gonna get it back. But yeah, I'm gonna see you guys later on today for day 24. Yeah, we had a good day today. Very good day today.